Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for our monthly series on crypto trends is Stephen Ehrlich, director of research at Forbes Crypto. Stephen, it's great to see you as always. Welcome back to Trade Talks.
Yeah, likewise, Jill. It's great to be here.
All right, Stephen, let's talk Bitcoin. The price has had a wild ride over the last couple of weeks. How is it looking as we approach the end of the month?
Yeah, so it's going to be close. Bitcoin has actually been on about a 6-month winning streak, but that may come to an end. It's right about even on the month, and I think it's actually even a little bit under. And we'll have to see how things end up. It didn't always appear to be that way. Bitcoin actually set another all-time high in the middle of the month when Coinbase went public by a direct listing. It almost touched 65,000, but it's come down since then, actually dropped below 50,000, recovered. It's back in the mid 50s now, which is about where we started. But unless we see a big accelerant or catalyst, there is a good chance that we'll have our first losing month in quite some time.
Bitcoin has always been the horse that pulled the cart, but its percentage of the total crypto market cap recently dropped below 50%. What does that mean? Are there any standard cryptos that you are paying attention to in particular?
Right. So that's a really important metric that we look at, sort of Bitcoin's percentage of the total crypto market cap. It briefly dropped below 50%. I think it's right around 50% as we're talking, Jill. And the last time that this happened was actually back in early 2018 during the sort of the throes of the ICO crisis, initial coin offerings. And I imagine most people remember how that turned out, not so well for crypto. This time around, Bitcoin's dominance is actually falling due to the rise of some DeFi, decentralized finance tokens, NFT tokens, as well as Tether, the largest stablecoin in the world, whose market cap itself recently passed $50 billion. So it remains to be seen how this is all going to turn out. I can definitely say that some of the altcoins are backed by better projects than those that really surged in 2017, 2018. And alt season is something that I think a lot of people look forward to, where they take some of their Bitcoin gains and try to roll them into altcoins to sort of stretch out their profits. But at the same time, this also can be seen as a sign that the market's getting a little bit frothier. We might expect a bit more volatility. So it's important for everybody to pay close attention to what's happening.
And Stephen, Coinbase had a successful debut. What does this mean for the industry, and what future signs are you looking for?
Right. So Coinbase's direct listing was a major watershed moment for the industry as a whole. There had been some other there are some other crypto-related companies that are public. Bitmain, the world's largest mining manufacturer, tried to go public a couple of years ago in Hong Kong, but that was rebuffed. I mean, Coinbase's successful direct listing, which was the largest direct listing in history, I mean, is something that can never be taken away. That said, its price, it has actually dropped, I think, about 20% from where it first entered the market, and it's going to, over the next several weeks and months, analysts and investors are going to try to figure out where Coinbase fits into their overall portfolio and their overall crypto portfolio. For instance, people are going to look to see how well it correlates with Bitcoin and some other mining stocks and trading stocks that trade on public bourses. But one thing that one thing that Coinbase has that's going for it is the fact that it's seen as more of a pure crypto play, but a diversified crypto play, because it supports dozens of assets, as do many other exchanges in the United States that haven't gone public yet. So its fortunes aren't necessarily reliant on how a Bitcoin or Ethereum or one particular asset does.
That's a great point. And to wrap up here, Tesla made some news yesterday when it sold off a portion of its Bitcoin holdings. I think it was somewhere around 10%. What is the significance of that?
Right. So I've actually been very critical of Elon Musk and Tesla over the last several months. I mean, Elon Musk has really shown the ability to move markets with his tweets related to Dogecoin, this meme coin that's really sort of taken hold and captured the attention of the GameStop Robinhood crowd. But I do feel that he tends to play with people's emotions, and unfortunately that also involves playing with people's money, even if they don't necessarily realize that. All that said, Tesla sold about 10% of its stock, as you mentioned, for I think about $100 million in profit. And what that I think really shows is I mean, two things. One, everybody needs to do their own research and not necessarily recognize that when Elon Musk or any other influencer on Twitter tweets about crypto, that's not investment advice. Two, I think it also provides a sign that institutions are starting to, I guess, pull their foot off the gas a little bit. There's a little bit of institutional exhaustion, and it's normal for some of these companies to take profits off the table when most likely they've made some significant money, and Tesla's no different. So a few things to keep in mind there, but it is interesting that Tesla did sell, although Elon Musk has also said that he did not sell any of his personal holdings, even though he has never actually disclosed what those are.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great, thanks, Jill.